Hello traders, James Stanley with StoneX and FOREX.com. It's a strange week in the FX market. We did get an impulse move in USD. The dollar set a fresh low on the back of the Treasury buyback announcement on Wednesday, but after that, it largely just spun its wheels. Now, there was a lot of volatility elsewhere. We had the massive breakout in Bitcoin, the continued rally in gold, so there's definitely a lot going on, but in currency world, I think there's still a big item that is kind of waiting in the wings, so to speak. And I'm going to explain that in this video when we look at the US dollar from a few different vantage points. I'm going to look at the dollar from dollar yen. I think there's still a big story that's in process of being played out there. Euro dollar, pound dollar, Aussie dollar. These are all setups I looked at on the Tuesday webinar. Those breakouts hit beautifully on the back of that dollar weakness. I'm going to update those in this video. So let's go ahead and get right to it. So first and foremost, in the dollar, like I said, we had that impulse move on Wednesday, and I looked at this in that Tuesday webinar, and as I said then, I was surprised to see how many people, especially that were in my social media streams, were seemingly getting bullish on this because you had these slightly lower lows in USD, and each time the dollar had rallied, sellers had come in to swat it back down. And I looked at this in a few different venues before, but for prolonged cases of dollar strength, it really felt like we were going to need to see dollar yen get back above that 160 level. In essence, we were going to need to see both the BOJ and the Treasury Department kind of wave the white flag, at least to a minor degree, after that dual intervention a couple of weeks ago. And that just didn't seem likely. Now, I'm going to get deeper into dollar yen in a moment, but wanted to focus on this chart in DXY first, where we had that move, that breakdown move on Wednesday. So from the daily, sellers clearly in control, fresh lower low after a lower high. But we have this stalling. There was this doji that printed on Thursday, and so far on Friday, there's a few hours until the weekly close, but so far on Friday, if we get down to the nitty gritty, we have a slightly higher low with another dose of indecision, right? Notice how we're slightly higher today, so there essentially is a bit of bullish anticipation in here. Now, the weekend could change things, especially with President Trump. He's got a pinch for dropping headlines and new events over the weekend. But this is the kind of thing that would get me to looking for or waiting for a pullback. And given this chasm of support that had built in before the Wednesday breakdown, I think there's a pretty ideal place to look for that resistance at prior support to play out. It's right in this area in here, like from around 99.41 down to around 99.25-ish. Now, this is the specific chart that I was using in that Tuesday webinar, and so this is going to give, I think, a little bit more color to that theme. But, you can see very well where the downside move has essentially stalled down here just above 98.50, which has a few different things going on. But, if you wanted to be more aggressive and you didn't want to wait for price to run all the way back in there, there are a couple of shorter-term levels, 99.18 and right around that 99 handle. That 99.18 level specifically was from a gap all the way back in April. I know it seems kind of random, but it's come back in multiple times as both support and resistance. So I've kept it on the chart. Might still have some merit. But, bigger picture, it's this level here, that 90, right around 99, 98, 98 to be exact. But that is a Fibonacci level from a longer term move, the 2021 low to the 2022 high. And that Fibo sequence has tested out quite well in a few different ways, like the swing high that we had in May of last year, right at the 50% mark, which isn't technically a fib level. It is a GAN level, but it's not a fib level, just in case any technical technicians wanted to opine on the matter, but it is a GAN level technically. But anyways, the 618 of that move is right at around 99 even. It has had some intraday pull as well. Go back to March where it was support, turned resistance, turned support again. But so I'm looking at that as a short-term R1 and R2 right around that 99.18, and then you can call that 90 that S or R3 zone anywhere from those three swing lows, those lower lows that led to the breakdown move earlier this week. Let's just go ahead and get to dollar yen because I think that's still the eye of the storm. Now, the challenge in dollar yen is the carry, right? It's still negative carry on short positions. So if you're going to hold a short in dollar yen, you're probably going to be paying rollover. Not a comfortable spot to be. And on the converse of that, if you're holding long positions, you can earn rollover. So, at this point, I think dollar yen is still somewhat attractive on pullbacks. And as a case in point, you can see that Wednesday sell-off that we had came right into 198.08, 198.09, and buyers jumped right back in, right? And then another attempted pullback right in here on Friday morning. This was after the Japanese CPI print. It came out at 1.9%, so a little bit above expected, but still below their 2% target. But we had that Japanese CPI print, and again, bulls jumped on the bid and pushed it right back up. Now, the challenge in dollar yen, and this is why I think prolonged bullish strategies in the dollar are problematic, is it's difficult to get too excited for upside above 160. Now, I went over this last week. I don't know that 160 is that hard line in the sand for the BOJ or the U.S. Treasury Department, but I think 164 is safe to assume as such because of what we saw previously. We get up to 164, 165, would not surprise me to see an announcement. And, at this point, the Treasury doesn't even need to do anything. They could pull another one of those rate checks where they have the New York Fed call around to banks and say, hey, what are you quoting dollar yen at? Okay, well, we might do something, so be aware. They don't even need to actually spend any money to do this. They could just, essentially send a shockwave through markets with a couple of phone calls. And 164, I think, is logical to assume as that line in the sand. And, if you want to look maybe even more conservatively than that, 165. Because that, I think, is what ultimately was being defended. We got close to 164 or a break of 164, and they jumped in, both sides jumped in ahead of time. I think 160 is the level that markets have kind of assumed might elicit that type of approach or that type of response. It of course, hasn't come into play yet. But, again, this is why I would be hard-pressed to get too excited for topside in dollar yen above 160. If we do get above 160, right around 160.64 and then 161.95 are pretty major levels that I have on the chart. I think the case that could support resistance at those levels, it draws all the way back to the way this played out in 2022. 2022, the line in the sand was 150. We got above 150. There was no response, and then markets just ran for it. And then eventually BOJ jumped in with the high at 151.95. So, even if 160 is the line that they do not want markets to cross, it isn't necessarily like they're standing there with an offer to hold price below that level. But that again is why I'd be challenged or hard pressed to look for prolonged USD strength right now. That said, if we do get this running into that 159.60 area or maybe even into 160, that's what supports the pullback thesis in the dollar. And in that case, I might be looking at that R2 or R3 level that I just looked at a moment ago in DXY. Now, while the fireworks have definitely been in dollar yen, euro dollar has been just straight up pretty clean. Another breakout, another fresh high this week. Again, looked at this in the Tuesday webinar. And ever since the FOMC rate decision in July, bulls have been putting in the work. Nice little breakout from a falling wedge, hold of a higher low support. These are all the same levels that I've had on my chart since then. You could even see the way this grinded through this zone, 115.76, 116.13 this week. 116.13 was setting the high on Monday. The pullback of which held 115.76, got the breakout. You probably know where I'm going to look for support for next week, right in there, 116.13. Again, this would need a dash of USD strength, so I think this would need to come along with a rally in dollar yen up to around that 159.50, 159.60 area. But Doji on Thursday matches the Doji that we had in USD. And this is the kind of thing that could support a pullback thesis, especially if we get more indecision today. If this daily candle, and again, there's a few hours until the close when I'm recording this, if this daily candle closes below that level at like 116.70, it's going to look a little bit more ripe for a deeper pullback. So short term, there might be some open door for running a pullback down towards that 116.13 level. But if we get down there, that's the zone that I'm going to be looking for some support to play. Again, it seems kind of random, but it was a spot back in March that was support turned resistance, support turned resistance, resistance. So it's support again. Maybe there's a Fibbo level there. Maybe there's like a pivot level. I don't know. But the what is far more important than the why, and the what is this has been a big zone. And so I'm going to look for support to play there if we do get that pullback thesis. On upside, going out a little longer term, the level that I'd be hard-pressed to remain super aggressive is right up here above that 118 handle. Euro's had a couple of trips above 118. It hasn't really gone well, and I wouldn't want to get overly bullish there. So, that's kind of what I'm thinking for top and profit targets at this point on bullish euro dollar plays. Cable. So I've been a bit more excited, I guess you could say, for dollar weakness to play out here. And as such, we've had those two indecision candles over the past day and a half. Look at cable, continuing to rip, continuing to run right into a really, really big zone. And, technically we got a fresh high here that we don't have in euro dollar printing today. That said, same story. The fear here is chasing a breakout. But if you look at that prior structure, there is a number of places to look for pullbacks to play. Of late, cables seem to be a little sloppier, a little messier. So this, very clean, hard line in the sand, I'd be hard-pressed to get, overly aggressive on until I had evidence that support was playing. But that plot's right around 135.58 or thereabouts. You don't, again, you want to plan for a couple of different scenarios in here. So 135.58 is certainly a line in the sand. 135 is the big figure long term that, cable is just churned above right now, but that certainly would be a zone of interest as well. Shorter term, however, there is another spot in here right around that 136 handle. This was a higher low. This is what ideally I think bulls would defend to keep the door open for bullish continuation plays in cable. Aussie, I'm not usually a big Aussie guy, largely because of time. I don't do a lot of activity after the U.S. market close, and that's when, and just shortly after, is when Aussie usually has a lot of the news and headline items coming out. But started looking at this a couple of weeks ago when I was covering the opening bell, largely because there was an RBA rate decision and there was a clean technical setup. This one has just absolutely ripped. I'm still keeping this on the short side of the dollar radar. We had a beautiful breakout earlier this week, or on Thursday, so the latter portion of the week, but earlier from when I'm recording this now. But, again, a pretty ideal spot of prior resistance to look for fresh support to play for bullish continuation scenarios, bullish continuation thesis. That's right around 71.29 or thereabouts. You go out to the daily, so this would be like a short-term level to look for, but realistically, this zone, I think it's pretty important. Support turn to resistance. It's like 70.80 up to like 70.87 or thereabouts. A sign of support above the 70 big figure, I think, would be a big deal. But you look at this and the way that it's run on the weekly, and that is beautiful. Big change so far in Q3. But, the challenge is we're steering into overbought territory. Again, there's still some time until the weekly close, but right now, RSI on the daily is overbought. That's not necessarily a deal killer. It does just highlight, be careful, because this trend is well priced at this point, and oversold, overbought on daily Aussie dollar. Be careful of chasing at that point, right? But that's what I'm looking at, again, on the short side of USD as we go into next week. On the long side of USD, I think that's a more difficult argument to muster. And again, that's because I still do think that a lot of dollar dynamics are emanating from here. And I think to get really excited about USD strength, you need to be okay with the idea of dollar yen getting above 160 without some type of a repercussion from policymakers. And that's just not a scenario that I want to work with right now. But maybe you do. If you do, then I think the conduit for that is looking pullbacks, dollar yen, so that at the very least you can concentrate risk. So that if you're wrong, if you do get one of those blowout moves, you could try to mitigate the damage, right? But if you look at dollar yen, there still is a case to be made on these pullbacks to support, which we've been seeing. Multiple pullbacks to support. Bulls, they're not all that excited to run through fresh highs or to run breakouts, but they've been very open to dealing with or working off of pullbacks. I mean, that was a shock factor. That Treasury buyback announcement came out of nowhere. And you can see it was a violent move, and it ran through some stops, but buyers just stepped right back in at 198.09, right? And if you look at the fundamental dynamic, not a lot of reason to fade that right now. Now, I bring this up because next week the big item on the calendar is Kevin Warsh's speech at Jackson Hole. Now, we do get a piece of inflation data before we get there on Wednesday, and that could be telling. But the CPI data that we got out of Japan this week at 1.9%, it wasn't enough to excite the short side of the move, right? And so ultimately, and this is something I've been talking about for the contrarian case in dollar yen, for this thing to really unfold, we're going to need to see worsening in the U.S. economy, and we're going to need to see inflation in Japan stay relatively high. Rumors of a Japanese rate hike in September did little to excite bears in the pair. Longs just continued to bid pullbacks. So if this is going to put in a deeper reversal without a break eliciting an intervention or an intervention-like approach, then we are going to need to see we're going to need to see some type of change in the fundamental front, which just hasn't appeared yet. But that, my friends, is what I'm looking at for next week. Like I said, the Kevin Warsh speech at Jackson Hole, I think, is going to be the big deal. But as always, thank you for your time and happy trading, ladies and gentlemen.